But to me, that's just a sign that this cyclical pickup, we're seeing the best of it. But ultimately, one should expect China to slow because the central government is allowing the biggest domestic sector in the Chinese economy to correct, which is residential property. To me, Japan, the micro looks quite encouraging in Japan, but the macro is clearly negative in the short term. So it's quite clear that the sales tax increase, the reaction economy is much worse than what the authorities were hoping for in terms of last quarter's data. So right now in Japan, there's a lot of focus on whether the government will go ahead with the sales tax increase, which is meant to be happening next year. Abe has to make a decision on that in December. So this quarter's data is going to be very important. The BOJ are currently predicting 1% real GDP growth this fiscal year. The private sector economists have been bringing their forecast down. They're now running at 0.5%. The BOJ will have to will formally upgrade its 6-month assessment of the economy at the end of the end of September. So the BOJ is hoping things bounce, but they may not bounce. So if the BOJ downgrades, and then if the GDP data for this quarter disappoints, then Abe is going to have a difficult decision to make on the sales tax increase. My guess today is he still goes ahead with it, simply because for him to say he's not going ahead with a sales tax increase would almost be an admission that Abenomics is not working. If he goes ahead, and Kuroda has publicly stated that the government shall go ahead, Kuroda, the BOJ governor, then the obvious thing would be for Kuroda to do more monetary easing to underwrite the second sales tax hike. However, if the yen, I think that's the base case, but his willingness to do more QE will reduce if the yen keeps weakening. A weaker yen from here is not in the interest of Abenomics.